Hi, Brian. Thanks for joining me today. Super stoked to have you on the Mark Divine Show. Appreciate your time and how things going on your end.
Good. Yeah, just busy as usual, but yeah,
Yeah, I see
never
that,
dull in
man.
crypto.
It's kind of every day is a busy day in blockchain, but man, I tell you what, after the Ukraine situation kicked off, seems like there's a hyperactivity, right, with everything that's going on. I mean, maybe that's a good place to start. I mean, what is going on with regard to Bitcoin and sanctions, and what's happening right now that you see, and what are the implications for this the war in Ukraine?
Well, we're starting to see some use cases pop up, right? I mean, we
Mhm.
have borderless money. Bitcoin is, the first electronic borderless money. We had gold for like 3,500 years,
Right.
and then we were using like fiat money. But fiat money requires permission to use. You have to use a bank or someone has to give you permission to use that system. But Bitcoin
Mhm.
is a permissionless system. So if I want to send some money through the Bitcoin network over to someone in Ukraine, it shows up in 10 minutes
Right.
and they have it. So,
But
that's it.
it seems like it requires for certain players the permission of the exchanges and you know other parties, because I noticed that a lot of Russian, like thousands of Russian accounts were blocked. And what's
Mhm.
the how does that happen? And what are the issues for someone who doesn't want to,
Yeah.
who's concerned that they can get their account blocked?
Coinbase announced, I think it was yesterday, they're blocking 25,000 Russian accounts.
Hmm.
So what that means is they're not going to allow those Russian accounts to take fiat money and convert it into Bitcoin.
I see. Okay.
Okay, but once the money's already into Bitcoin, once the currency's already in Bitcoin, and you take the Bitcoin off the exchange, then I could do whatever I want with it.
Right.
There's no limitation. I just can't convert more fiat money back,
Right.
into crypto. So
So,
so
so
that's what Coinbase did.
I
That they
got it.
blocked that conversion.
So they
Um,
just said that they're not going to be an on ramp or off ramp back into
right,
fiat.
exactly. Yeah,
But
so they're opting out.
if I'm a Russian and I've got 500 Bitcoin, I can go in there and still transfer it. Can they block that access? I imagine they could actually.
No,
No.
that's the nice thing about it. It's like if I was going to send you an email, like no one, the government can't block that. They can't block me from sending you an email. Or if I want to do a phone call over voice over internet protocol with you,
Right.
like if we want to do a VoIP call, no one could stop that.
Right.
And that's what Bitcoin is. It's money over internet protocol, so it can't be
Hmm.
stopped.
MOIP. I like that.
Yeah, yeah, money over it. Yeah, exactly.
All right, that's interesting. What about sanctions? How does sanctions impact digital currency?
That's a good question. I haven't thought that deeply about it,
Mhm.
but um, it's like we just talked about, like with Coinbase. I'm sure someone in the U.S. government asked Coinbase not to allow these Russian-based accounts to convert more, you know, currency into Bitcoin.
Mhm.
So I'm sure that doesn't
Well,
help Bitcoin.
right.
But I don't see how sanctions are an issue. Um, like, do you want to ask the question, like, is there something specific you want to ask about, or?
Well, I was kind of wanted to pan out a little bit. I probably should ask the question a little bit better.
Okay.
In in this current situation with Russia as a major commodity provider, and with so much of the world's pricing of money being affected by commodity pricing, and sanctions basically shutting a lot of that commodities access down, at least in the West
Mhm.
to Russian commodities, then there's probably a potentially a significant inflationary drive there, or even deflation. We don't know. It could affect the value of fiat money, at least in the perception of the West value of fiat money. What's the position of Bitcoin? Let's talk about the
Okay,
loss.
that's a great question. Okay, so
Yeah.
let's do a little history. So all money before 1971 was commodity based money.
Hmm.
So for 10,000 years, we as humans use commodity based money. So Let's look back 10,000 years ago. We as humans lived in tribes of 100 to 150 people.
Right.
And whatever the scarce commodity was in that local area, that's what we as, in that tribe members decided to use as our store of value.
Right.
Or, we would go and work for a day and we would store our value in these scarce commodities.
Mm-hmm.
So for some tribes, it was salt. For others, it was stones or glass beads or shells,
Right.
right? But the problem with that is that if you're in one tribe and you go 20 miles and you want to do commerce with another tribe, and one's using shells and the other one's using glass beads, there's too much friction in the money, right?
Mm-hmm.
And so what eventually happened is we as humans decided about 3,500 years ago collectively to use gold and silver as our commodity based money. And that's what we've been using for 3,500 years until 1971. In 1971, President Nixon took the US off the gold standard. And what that meant was that he stopped the convertibility of dollars into gold.
Mm-hmm.
And so for the last 51 years, the world's been on an experiment. We've been experimenting with money that's only backed by the full faith and credit of the government
Mm-hmm.
that issues that money out. And that experiment is failing. And so when you say inflation, what you're meaning is that the dollar or the currency used to buy those commodities is going down. And it looks like the commodities going up in price.
Mm-hmm.
But in reality, what's happening is the currency, the dollar, is losing all its value.
Right.
And that's why it looks like the price is going up. A bushel of wheat is still a bushel of wheat.
Right.
The only reason it costs more for a bushel is because the dollar is losing its value.
That's that's right. Yeah, it's almost ass backwards to think that if the price or the power of the dollar goes up, that it's a good thing, because for the consumer, it's your purchasing power is going down.
Mm-hmm.
And it's built into the system, right? I read a great book titled Debt. I forget the author, but it was just a mind bender. But it really went into a lot of the details of what you're talking about. And one of the things that was just really powerful was just acknowledging how much even the Federal Reserve having a 2%, let's say, target for inflation. I mean, you're penalizing basically everybody besides the lender or the government, right? And the government likes that because over time, they get to pay back their debt with less valuable fiat dollars. And banks love it because they get to, pay their debt. But, the consumer gets kind of hosed in that because I think from 1985 to present, it's like the dollar's lost 85% of its value. Now it's accelerating.
Right.
So,
Well, I mean, what's 2% over 50 years?
yeah,
That's
it's
100%, right?
100%. Yeah.
Yeah, right.
And
So
now,
maybe
and now if we're at
it's
5 or
just not
6,
coincidence that it's been 50 years
right.
since we went off the a commodity based money like gold. It's been 50 years at 2% inflation.
Yeah.
That means the money's worthless. So
Worth less, meaning worth nothing, as opposed to worth less than it was. Yeah.
mhm,
And, it has major political ramifications too, because, the middle class is middle class no more. I mean, if 100% of your purchasing parity is gone or power is gone, and yet your wages have only increased by 50%, I mean, you've lost a significant ground there.
yeah, that's who's getting screwed.
Yeah.
When people talk about the wealth
Right.
disparity, what they're meaning and what they're trying to say is that people with assets like stocks and bonds and homes and real estate, they're getting wealthier, and the people who work for wages are getting relatively poorer,
Right.
right? Because the people if you lower interest rates like the Federal Reserve has done, they lowered interest rates down to
Mhm.
zero. That makes asset prices go up.
Right.
They're inversely related. So if interest rates go down, bond prices go up. If interest rates go down, the future cash flow from a company represented in a stock, that future value of the cash flow goes up.
Hmm.
And so interest rates go down, stocks go up, bonds go up, home prices go up, real estate goes up. The Federal Reserve is buying mortgages. So what does that mean? the Federal Reserve is pushing down the interest rate on mortgages, which pushes the prices of homes up.
Right.
Now, people who are graduating college, they can't afford a home
Right.
because the Federal Reserve has priced them out of the home market.
Right.
And so it's the Federal Reserve causing this problem, and they're trying to inflate asset prices, which they've done, and now they've overdone it.
Right.
And people, back to the original point, people that are working, that create wages, they can't keep up. They can't keep up with the gas prices, the health insurance, the home prices, car prices are up 40, used car prices are up 40%. You can't keep up.
Right.
And so something has to give.
Right. It's interesting to put a pin on this, but the political hand wringing is largely because the system is set up to in favor of asset holders. I mean, capital gains tax rates are 25%, whereas the max rate for wage earning is 39 or 37, but soon to be 39%.
Right. Yeah, but it wasn't like that before 1971.
Right.
So before we went off the gold standard, if you look at the gross domestic product, the GDP, and you compare that to the household net worth, they grew right along with each
Right.
other. So if I went out and if I went out and did a day's worth of labor, my net worth was equal to a day's worth of
Mm-hmm.
labor. Right? They coincided with each other.
Interesting.
But what's happened over the last 50 years is that the labor, the work has, generated, X, but the net worth is up 5X.
Mm-hmm.
And that's because interest rates, the Federal Reserve has artificially lowered interest
Mm-hmm.
rates, and it increased the asset prices. So the people with assets got richer, and the people working for wages, relative to the asset holders, didn't keep up.
Right.
And there's this huge gap between those today.
Right. Right.
So and like I said a while ago, something has to give. And so we're going to see what's going to happen over the next couple of years.
Right. And it's gotten harder and harder to buy those traditional assets because of the entry price or the know your customer rules and all the credit investor rules. And this is where blockchain assets, not just Bitcoin, but digital currencies, digital tokens, really has leveled the playing ground, hasn't it? For, you know, younger investors. I mean, I think there's just as many millionaires now who are minted from digital assets as there are probably in real estate or in other assets. I think that's
Yeah,
a promising thing, right? Don't you? Yeah.
yeah, it is very promising. So I met with Jay Clayton about a month after he got hired by Donald Trump to be
Yeah.
the SEC chairman. And we met at the St. Louis Federal Reserve building. And I asked him, I was like, why do we have these accreditation rules? Trump is for the common man, and why are we excluding people from participating in
Right.
startups, basically, and taking risk? And his response was, we're trying to investor protection.
Mm-hmm.
Okay, well, it's not investor protection. You're protecting the
Right.
rich, because you're only allowing the rich to give
Right.
access to these special opportunities. And so my point was that instead of making accreditation based on how big your wallet is,
Mm-hmm.
basically, because you have to have income of $200,000 or
Mm-hmm.
more, or a net worth of $1 million or more to be
Mm-hmm.
accredited. Why don't we make it on knowledge?
Mm-hmm.
If you could, if the SEC provided knowledge on their website, and you went through that class and you took a test, and you could prove to the SEC that you were knowledgeable about taking risk and investing, then that should qualify as being accredited.
Mm-hmm.
And so but they never did
Yeah.
anything. I mean, it's because there's, so it's almost like they want to have, these private opportunities for their special group of rich
Right.
friends, and they don't want the common person to come in. And that's great about Bitcoin. Bitcoin's not a
Right.
security. The SEC says Bitcoin's not a
Right.
security, so anyone can participate in it. And that's one of the great things about
Right.
Bitcoin is, if you want to buy $1 worth of Bitcoin, you can go buy $1 worth of
Mm-hmm.
Bitcoin. If you want to buy a whole Bitcoin for around $40,000, you could do
Mm-hmm.
that.
And the easiest way to do that, from my perspective, is back to our discussion about the major exchanges, Bitcoin, Kraken. You just simply set up an account, provide your ID, and boom, you're good to go. You can transfer some dollars into it
Yeah,
and buy your Bitcoin. It's pretty easy. Most people
yeah,
think it's really esoteric or hard, but these days it's not.
yeah. Yeah, Coinbase is really hard to use actually, and if you mess something up, their customer service is
It's true. I've
terrible.
noticed.
So what I recommend to people, if you have a PayPal
Mm,
account, you could buy Bitcoin at
mm-hmm,
PayPal. If you have a Venmo account, you could, which is Venmo is
mm-hmm,
a blockchain application owned by
mm,
PayPal. If you have Venmo, you could buy Bitcoin
mm-hmm,
on Venmo. Square Cash
mm-hmm,
App,
mm-hmm,
Robinhood, you could buy Bitcoin at Robinhood. And if you have a Fidelity or Schwab bank account or Schwab brokerage account, you could invest in the Grayscale
right.
Bitcoin Trust or the
Mm-hmm,
Osprey Bitcoin Trust. And those are two private trusts that just hold
right.
Bitcoin. And so, there's all sorts of ways, easy ways to get access to Bitcoin
Yeah,
now.
that's right. There's tons more I want to talk about Bitcoin, but I want to bring it back to you. Like, how did you get interested or involved in venture capital? I mean, you run one of the most successful firms, off the chain capital. How did you get interested in the digital venture capital world, and what was that like in the early years when you just started it?
Yeah, so I come from traditional
Mm-hmm,
finance. I started in 1991 as an institutional equity broker. And then I left that company in
mm-hmm,
2004, started my own company, which was a registered investment advisory
mm-hmm,
firm. And I was managing money for endowments and
mm-hmm,
foundations as their outsourced CIO. And in 2014, I saw Tyler and Cameron Winklevoss on
mm-hmm.
CNBC talking about Bitcoin when it was
Amazing.
$100. And I thought it was a total scam when I first saw them talk. I thought they were doing like a pump and dump scheme or something. And so I put it on my watch list because it just sounded interesting. I watched it go from 100 to 400, and then Congress held hearings in 2014,
Mm-hmm,
trying to decide, are we going to outlaw
mm-hmm,
Bitcoin? And Congress decided not to outlaw Bitcoin. One, because it would drive the innovation outside the US, and we don't want to
mm-hmm,
do that. And the second reason they decided not to outlaw it is that they realized back in 1996, the Supreme Court had already decided that computer code, specifically cryptographic computer code, is
right.
language and is protected by the First Amendment as speech. And so you can't outlaw Bitcoin in the United States. It's protected
Interesting.
speech. And so they decided not to outlaw it, and then it went up to $400. And then it ran all the way up to 1,200, and then it crashed because the largest custodian of Bitcoin at the time was
Yeah.
Mt.
Mm-hmm,
Gox, and someone stole 850,000
mm,
Bitcoin. And so the whole ecosystem crashed. Bitcoin went from 1,200 down to around 300. As a value manager, that's when my ears perked up. I was like, okay, it's down like 70, 80%. Maybe the suckers got washed out. Let me see if there's a value
mm,
opportunity here. And so I dove into it to figure out what is Bitcoin. And I read the Satoshi Nakamoto
mm-hmm,
white paper. And as soon as I read that, it clicked with me. Like I understood how we're going to rebuild our entire financial system on blockchain
mm-hmm,
technology. And the reason I understood that is because when we built the internet 30 years ago, there was a piece of software that was missing. And so the internet is supposed to be a peer-to-peer system. Like if I want to send you an email, I can just send it to you, right? I don't need permission or someone to clear that
mm-hmm,
email for me. But our money, it's not
mm-hmm,
that way on the internet. The internet was built on top of the banking system and built on top of the credit
mm-hmm,
card system. So you need to have a bank account or a credit card account to do financial transactions on the internet. And that's not the way it was supposed to be built. And the reason it was built that way is because no one could figure out how to create the software to allow us to do this peer-to-peer
mm-hmm,
transfer. And that's all Bitcoin is. That's all blockchain is. It's that solution that we were looking for 30
right.
years. And someone figured it out and gave it to the world for
Yeah.
free. They said, here's the solution. That person was Satoshi Nakamoto. They figured out how to solve what's called the double
Right.
spend problem. And they posted it on the internet. And a number of developers started working with Satoshi to
Mm,
launch Bitcoin, and that's how it started. It started organically. It was a gift to
hmm
the world, and now what we've been doing for since Bitcoin or blockchain's been invented, is we're rebuilding the
mm,
entire internet, and we're taking it off the banking system, and we're taking it off the credit card system, and we're putting it on blockchain
mm,
technology. And so it's going to be very
hmm
disruptive. The banks don't like it. The credit card companies don't like it. The traditional finance people don't like it. But it's going to
hmm
happen. And so Bitcoin, blockchain, and decentralized finance will replace the current
hmm
financial system. And it's not going to happen
hmm
overnight, but over the next 10 to 20 years, our internet will be a blockchain based internet. It's not going to be based off banks and credit
Yeah,
cards anymore.
such a great description and history. Thank you so much. And the software you're talking about essentially is just a digital distributed ledger. I was a CPA
Oh,
in
it
my
is.
first career, so I kind of got it when I read that.
Yeah.
I'm like, oh yeah, that kind of makes sense. Yeah.
Yeah.
And then this idea about Nakamoto has been fascinating as part of the lore for those who don't know it. I mean, the guy, we don't even know if it's an individual or a group of people. It never been revealed. Don't know if he's alive, and yet there's a million Bitcoin kind of associated with accounts that he mined or in the early days, just basically playing around with it, and then he just disappears like a year and a half to 2 years after he published that white paper. What's your take on Nakamoto and Craig Wright and kind of the whole lore around who is this individual or
Yeah. I mean, I have no idea who Satoshi
amazing?
Nakamoto is. Um, I don't know if it's one person or a group of people, but from what I read is if you look through when Satoshi was active working with the developers, it was between 8 a.m. in Eastern time and 10
hmm
p.m. Eastern time. That's when like 95% of the communications occurred. And so that kind of tells you it's someone
Right.
on the East Coast, like Eastern time. Um, and since it was so consistent between 8 a.m. and 10 p.m., it kind of leads me to think it's like agency, like a
Yeah,
government
I was just going to
agency.
say some people think it
Um,
maybe was the
yeah,
CIA or even some
yeah, because a lot of the coders I know, even if they're on East Coast time, like we're up at 3 in the morning
right.
doing
Yeah.
work, right? So the fact that it was mostly between 8 a.m. and 10 p.m. tells me it was someone going to the
Interesting.
office doing that. And so if I had a guess, I would say it was the CIA or the
Interesting.
NSA that actually figured out the solution and gave it to the world right before they thought the banking system in the United States was about to collapse. When you look at when this code was released, it was during the
hmm
financial crisis. And it was, we were within days of our banking system like
Mm,
ceasing. And this software suddenly appears, and all this software does is allow us to do financial transactions
hmm
over the internet without
mm.
using banks. And so I think someone in the government panicked and said, "Here's the code. Here's how we can
Right.
do financial transactions. If our
I love
system
that.
goes down, and once it's out there,
Right.
you can't pull
Right.
it back. You can't put the toothpaste back in
Yeah.
the tube." And what the government's been doing over the last 14 years, it's been a massive
Right.
misinformation campaign, branding it as something nefarious. You don't want to touch it. It's used for criminals. It's not
hmm
ESG friendly,
hmm
which is totally false. Um, and then the other thing they've done is they taxed it
hmm
as property, so you can't use
hmm
it as currency. So that slowed down the adoption. And so there's the government doesn't is trying to slow it down, but you can't
hmm
stop it. It's almost like
Yeah.
religion almost. It's like once the thought's out
Right.
there, you can't
Yeah. My
unlearn it.
my perception was just that they're actually trying to slow it down, but not end it. They just want to give the banks and the government itself time to kind of play catch up, so they're not left behind.
Well, the U.S. government is one of the largest owners in the world of
That's
Bitcoin.
interesting. I did not know that.
So
Why do they keep
yeah, so
auctioning it
through the
off when they seize it then?
those are the
I
U.S.
see.
Marshals that auction it off. If you look at the FBI, there's never been an FBI
Interesting.
auction. So the Department of Justice, this was probably about 7 or 8 months ago, moved billions of dollars of Bitcoin from their servers in San Francisco
Mm-hmm.
to Anchorage, which is a qualified custodian for
Hmm.
crypto assets. And we saw that move through the
Interesting.
blockchain. And so we know the US government owns billions of dollars of Bitcoin. The question is, how
Mm-hmm.
much do they own? And we've sent Freedom of Information Act requests to the Fed, to the IRS, to US Treasury, to the Department of Justice, to the FBI, to ask them, how much Bitcoin do you own? It should be like an easy question.
Right.
We know you own it. How much do you own? And we can't get an answer. They keep responding and saying your question's too broad.
Interesting.
Um, you're asking the wrong group. It's just that we're
Maybe they
getting a
think it's a matter
runaround.
of national
So
security because they want to maintain the fiat strength, right? They don't want to necessarily project that they're preparing for a Bitcoin standard in the future.
mhm.
Yeah,
But we don't know. And
would be
it'd
nice.
be nice to know.
Yeah,
We're taxpayers. I'm a U.S. citizen. I don't think it's a
right.
complicated answer. Like, how much Bitcoin do you own? Like, we
Hmm.
saw it move. Like, how much
I
do
have a
you
question.
own?
So about this is similar to U.S. owning Bitcoin, but I've heard that Russia's FSB, the former KGB, is one of the largest holders of the assets that were formerly in the Mount Gox hack. And is that true, or do you know? And how do they get
Yeah,
those?
that is true. Yeah, so that's some of our
Okay,
Bitcoin.
some
So,
of yours
so
that
we're one of
you've
the
invested in. I
like
see.
yeah. So off the chain capital, we run a fund, and part about 10% of our assets are in Mount
Right.
Gox bankruptcy claims. So we buy bankruptcy claims from people who need liquidity, and so that stolen Bitcoin, that's missing, that's part of
Mm,
our future claim. And so we actually hired a team to go find, where is that Bitcoin? The trustee, the Japanese trustee, recovered 141,000 of the 850,000 Bitcoin that were stolen. And so we
mhm.
tracked it down. And so a couple days before the Russian hacker was arrested in France, he transferred around 600,000 Bitcoin
Mm.
to the KGB, to the Russian Secret Service. And so that's where it is. So some of our stolen Bitcoin, actually a majority of it, is with the Russian Secret Service.
How do you get that?
Yeah,
Yeah,
I'm not going after
exactly.
that. So
Oh, that's fascinating.
yeah, yeah.
Putin is
So
not going to let his paws off of
that's a
that.
good way to get a dart in
Yeah.
the neck or something. Yeah.
Putin,
So yeah, but we tracked it down. We know where it is. So it's just we'll see what happens. But that's about $24 billion
that's
worth of
insane.
Bitcoin with the
Wow.
Russian Secret Service.
While we're talking, it's just stolen,
That's
I'm
stolen.
flat out. That's fairly interesting. Speaking of large owners of Bitcoin, I won't say his name because I don't think he's probably not super stoked that he publicly acknowledged this. But there is a single individual who owns 1 million Bitcoin. Right. This is
Well,
no, no,
that's
no.
Satoshi
There's
Nakamoto.
I'm
That's
pretty
the
sure that the Indian fellow, I can't remember his name. He's a chairman at Richard Branson's space company. You'll know who I'm talking about. He bought a
I don't
million
think
Bitcoin
there's yeah, I don't
at
think there's
$75 each.
it,
I read about this. You got to look into this. I read
yeah,
about
yeah,
this.
I'm not aware of
At
that.
any rate,
Okay.
the richest man in the world that nobody knows about yet, or future richest man.
Uh-huh.
I don't know. I could be wrong about that, but I remember
Yeah.
reading about that, and I thought that was just such a crazy bold move, if it's true. So let's talk
Mhm.
about back to countries
Yeah.
and so I want to relate this to kind of hard money versus soft money and what could happen right now and why Bitcoin could lead to a
Mhm.
better economic foundation in the future. But El Salvador, right, the first country to say that Bitcoin could be legal tender and to actually start accumulating Bitcoin publicly. I'm not talking. Of course, we know Russia, United States, and probably China have Bitcoin holdings, but so I've heard that in the context of game theory, right? The first countries that really start to buy into and hold Bitcoin when the price of Bitcoin is at the relatively low value of $40,000 or whatever per coin, then they will have an asymmetrical advantage over countries that kind of cling to the fiat.
Right.
And why is that? What's your take on that?
Yeah, so it's like you said, it's called game theory. So you're waiting for the first mover, which was El Salvador. And if you look at what happened to El Salvador, it's only been like 9 months, I think, since they declared that they're going to make
Hmm.
Bitcoin a reserve currency
Hmm.
and legal tender. So this data came out
Hmm.
about 2 weeks ago, and it showed El Salvador's like GDP
Hmm.
was up 10% over the past like 6 months. So their economy
Hmm.
is benefiting from being on Bitcoin. And so, and now you have what's going on with the Ukraine
Hmm.
and Russia, and other countries are starting to take notice. Like, if I have money in the Bank of New York, if I'm Russia and I have money in Citigroup or Bank of America or Bank of New York, that's really not my money, right? Because if Russia tries to get that money out,
Right.
it's not going anywhere. It's been seized, and so Bitcoin is seizure resistant. You can't seize Bitcoin, and so I think a lot of governments are going to
Right.
start paying attention now. Like, maybe we shouldn't have so much in dollars. Maybe we should have maybe 1% or
Hmm.
10%
Hmm.
in Bitcoin. And as that money moves from dollars into Bitcoin, then you're going to see Bitcoin go up in value because there's a finite supply of
Right.
Bitcoin that could ever be created. There's only 21 million Bitcoin that could ever be created. There's around 19 million that have been created already. And there's about 900 Bitcoin that's created every day that's rewarded out to the people who clear
Hmm.
the transactions on the Bitcoin
Hmm.
network. Those are called miners, and that reward that gets issued out, that gets cut in half
Hmm.
approximately every 4 years. And so in 2024, that reward's going to get cut from 900 Bitcoin a day
Hmm.
to 450. So the reward it's every 10 minutes. So right now there's 6.25 Bitcoin being rewarded out to the miners or the
Hmm.
people clearing the transactions every 10 minutes. And in 2024, that's going to get cut to 3.125 Bitcoin
Hmm.
every 10 minutes. So that's 450 Bitcoin a day. And then in 2028, it'll get cut in half again to
Hmm.
225 Bitcoin a day. So there's going to be 32
Hmm.
of those halvings until all 21 million
Hmm.
Bitcoin are issued out. And we've had three of the
Hmm.
32 halvings. And we had 2012,
Hmm.
2016, and 2020. So we have three of the 32. There's 29 more of
Wow.
those
And
halvings
every
left to
time that
occur.
happens,
But 90% of all the Bitcoin that can be created has already been created. And so it take about 120 years to create that
interesting,
last
right?
10%.
90% of Bitcoin has already been mined. Every time there's a halvening, like you
Hmm.
just described, the price of Bitcoin has shot up, right? And then leveled out a little bit, or so volatility obviously is a big issue. But
Right.
so what happened here? Let's look out to 2030. Let's just say 2030, and I think by 2030, you're going to see roughly 98% of 99% of all
99.
Bitcoin will be have already been mined. And do you
Yeah.
think you'll see the price of Bitcoin then start to stabilize so that it can actually be used as currency? Because there's store of value right now. It's clear that Bitcoin is being used as a store of value, in addition to gold and other hard assets like art. But it's difficult to use it as a
Mhm.
transactional currency because of the volatility. But it seems to me that once all the Bitcoin is mined or nearly mined, that you'll see a stabilization in the price, so that not only will it be a store of value, but also you'll be able to transact more, a little bit more safely with it. What are your thoughts on that?
Right. Yeah, so you're 100% right. So only 1% of the world owns a Bitcoin today. About
Mm,
25% of Americans own it. So
right.
you can't use it as currency if 75%
Hmm.
of the people can't use it, right? So So, but as we approach 2029, 2030, using what's
Hmm.
called S-curve analysis, that projects that around 2029, 2030, about 90% of US
Mm.
households will own Bitcoin. And so when 90% of people own it, then
Right.
you could use it as a currency. Right now you can't because,
Right.
three-fourths of the people don't have a wallet or
Right.
can transact in it. So,
Yeah.
so, and that's why it's volatile. We're in this period of
Right.
what's called price discovery. We're trying to figure out
Hmm.
what is this asset worth? And so we have models that help
Hmm.
us predict that. And these models are between 91 and
Right.
99% correlated to the historical price of Bitcoin. And what the models are telling us, and your listeners are probably going to laugh, but the models are telling us that in year 2029, that Bitcoin should be worth somewhere between $10 million of Bitcoin and $18 million
Oh,
of
that's
Bitcoin.
cool. Yeah, I thought it was
And
$1 million, but
a
25.
million is
Okay. It's just
2025.
around the corner, Brian. That's
Yeah.
incredible. And for
Yeah.
2022, it's somewhere north of 100,000, right?
Yeah, yeah. Today's fair market
Okay.
value is right around 100,000, between 100,000
Yeah.
and 180,000. And so Bitcoin
Hmm.
is very undervalued today.
And that's fascinating. So let's talk about how this could affect um, as Bitcoin. Let's just assume that the world doesn't blow up, World War III, doesn't take down the internet. Bitcoin survives, and it slowly until suddenly replaces the fiat as the primary standard. So that's good news because we go back to what's called hard money, whereas fiat is soft money. Soft money is it's not backed by anything but the goodwill, like you said, of the government. If that goodwill goes or trust goes down, then the
Mhm.
value of the dollar goes down. But hard money is backed by the trust of the belief of the people, right? Like people believe that gold is valuable, and they have for centuries. So that makes it hard. People will believe that Bitcoin is valuable. So where I'm going with this, and I want to get your take on it, is it seems to me that hard money gives individuals a preference for savings because they know that their value of the Bitcoin is going to go up. So there's no urgency to spend it. Whereas soft money, like fiat dollars, gives a preference for spending. And so you can see why
Right,
our government loves soft money and actually likes inflation because you have an incentive to spend and you actually have an incentive to borrow and to go into debt. Whereas with hard money, you have an incentive to save and an incentive to stay out of debt, which is a radically different economic structure.
right. Yeah.
That's how it used to be,
But that's
right?
how it used to be. Yeah, yeah, that's how it like I mean if you go back to the Bible, I mean that's how your money was valued based on
Right.
days worth of labor. Like that your wealth was a day's worth of labor. That's how you got measured. You got paid at 3 days worth of labor. um, so that's yeah, you're 100% right. You want to store your value if you
Right.
think that asset will appreciate. If you think it's going to depreciate because of inflation, then you want to spend it. You want to get it
Right.
out of your hand. It's like a hot potato. And not only does it
Yes.
incentivize that, it
Right.
incentivizes debt too. Look at how when people came to America, they would come
Right.
over as
Right.
indentured servants, right? So you're, to pay for the cost of the ship to get your ticket, to bring you over, you had to work for a year or two for the person that, you know, paid for your
Right.
ticket to get you to America. So you paid off your debt and then you were free, after that. Um, and so it's the same thing with credit cards today, or your or student loans. I mean,
Hmm.
let's take the student loan industry for a minute. You have kids who are 18 to 20, 22 years old who weren't taught money in high school, who are allowed to take out hundreds of thousands of dollars of loans out. And then these loans are
Hmm.
not, you can't dismiss them. You can't bankrupt yourself out
Hmm.
of a student loan. I saw a tweet the other day. It was crazy. It was a guy said he had borrowed $115,000 in student loans over the past, I forget number of years, but he's paid $115,000 of interest, and he still had
Oh my God.
$115,000 of debt. So all of his
Right.
payments just went to pay the interest,
Right.
and he still has all the debt.
That's fascinating. There's almost a reckless mindset in our current student loan market because of all the talk about forgiveness or, you know, jubilee for the student loan debt holders. You know, people are like going, screw it, I'm just going to keep taking it out because it's going to get forgiven
Yeah,
someday. Because they see it happening with the federal,
right.
you know, with federal workers and whatnot. I think that's very dangerous. Not to mention, you know, just the stress, like you said, of having to deal with all that debt, with the uncertainty of knowing whether or not you'll be able to pay it back.
Yeah.
But that's a different subject. That's fascinating. A lot of people are confused about the difference between the different digital assets. So we've talked a lot about Bitcoin as actual money,
Hmm.
right? It's just digital money and it's got a store of value and you can use it to buy things, but it's not necessarily a smart thing to use it. But then you've got Ripple, which, you know, was supposed to be a money for cross-border transactions, but now the SEC is trying to say it's a security, or at least their sale of it constituted it being a security in their ICO. And then you have, you know, um, then you have Ethereum and Solana, which are essentially um, a platform for smart contracts, which, you know, which create tokens, which almost create a fourth
Hmm.
class utility token. So, can you help the listener kind of understand, like, what are the different assets and what are good investments or bad investments, and like how do you, as off the chain, kind of assess where to put money for your clients?
Okay, so that's a lot of questions. So let's talk about
I
Bitcoin
know.
versus,
Sorry
okay,
about that.
Bitcoin versus
I have trouble
actual.
asking one
Yeah,
single, you know,
right,
clear question today.
right. There's Bitcoin, and then there's everything else. That's how I look at it. Bitcoin is the only truly decentralized protocol out there.
Interesting. Right.
Every other
Because
one,
the others are started by companies,
they
right?
were started by a
The
company or a foundation.
or a
So yeah,
foundation. Got it.
so I think Bitcoin, like the SEC says, Bitcoin's not a security. Okay. All the other ones, including Ethereum, are securities. If you
Mhm.
use what's called the Howey test to determine what's a security and what's not, Bitcoin's not a security, and all the other ones are. And so that's where I start from.
Okay.
All right. So
But the
what?
SEC doesn't treat Ethereum like a security right
Not
now.
yet. No, not
Not
yet.
yet.
Not yet. So
Interesting.
yeah, I mean they're testing it with Ripple. You mentioned Ripple.
Right. Mhm.
So they think that's the strongest case that they have. And so a couple days before the Trump administration was over, Chairman Clayton, through the SEC, filed a lawsuit against Ripple, saying that there's the XRP token is a security. And
Mhm.
so I don't know which way it's going to go. So we'll find out. When that goes all the way up to the Supreme Court, and we'll know. In my opinion, it's a security, but we'll find out what their case looks like. And so you mentioned Solana and Ethereum. So let's talk about those versus Bitcoin.
Mhm.
So Bitcoin is what's called a proof of work protocol. So
Mhm.
what that means is I go out and I volunteer to go buy computer equipment, and I download this Bitcoin software to that computer, and I clear transactions on the network. In exchange for buying the computer equipment, paying my electric bill, I get to participate in a reward system that I might get, some Bitcoin for clearing these transactions. If my
Mhm.
computer is
Mhm.
fast enough, then I have a higher probability of getting the reward. And so there's
Right.
this economic incentive to go buy faster and faster computers to clear transactions on the network. And that increases what's called the hash rate, or the computational power behind the Bitcoin network. Okay, so that's
Mhm.
proof of work. If you look at proof of work networks like Bitcoin, you have Bitcoin, Bitcoin Cash, like all the hard forks off Bitcoin. You have Dogecoin, Litecoin, Monero, Zcash. You have the original Ethereum, which they're trying to convert to proof of stake. But if you
Mhm.
take the original Ethereum out, Bitcoin is 92% of the value of all the proof of work protocols. So Bitcoin has already won. The world has
Mhm.
already decided that Bitcoin is the standard for proof of work. So eventually it's going to be 99%, and then it's going to be 99.9% of all
Mhm.
the proof of work protocols. So all the other
Mhm.
proof of work protocols, Dogecoin, Litecoin, Bitcoin Cash, all the hard forks, eventually they go to near zero. Okay, because Bitcoin's already
Mhm.
won that category. The other category is proof of stake protocols. So, like you mentioned, these are basically operating systems or
Mhm.
smart contracts on the internet. And
Mhm.
so, a lot of people say, "Well, what is that? What's a smart contract?" They're basically if-then statements. So, if you
Mhm.
ever coded, you could put like an if-then statement. Like, for example, if I put $1 into this Coke machine, then a can of Coke will come out. That's an
Mhm.
if and a then, right? Or let's just make it a little bit more complicated. If it rains 30 inches within 24 hours in Champaign County, Illinois, then $60 million of crop insurance gets paid out to these 10 farmers. So if and then that's a decentralized finance,
Mhm.
application. And so that's what Ethereum does, Solana, and there's hundreds, if not thousands, of other protocols out there that do that. They're called smart
Mhm.
contracts.
Mhm.
Some do prediction markets, some do stock exchanges, but some do non-fungible tokens or NFTs. And
Mhm.
so the world's trying to decide which one of those platforms will be the winner.
Mm.
It could be Solana, it could be Ethereum, it could be the Binance Smart Chain, um, you know, Cardano, EOS. We don't know. It's still too early. They're fighting it out. What we
Right.
do know is Bitcoin is the winner for proof of
Mhm.
work, and we just don't know who the winner is yet for proof of stake.
Yeah, and it's likely that there will be a number of winners, just like you have Google and Facebook, and
You have very few winners.
yeah,
So
you'll have a small number, and then on top of those, a large number of use cases in
yeah,
utility tokens.
yeah. There's a principle called the Pareto principle,
Right.
and so
Mhm.
most of the network will conjugate into one dominant network. So for proof of work, it was Bitcoin, and we
Right.
just don't know which one of the proof of stake ones it'll be yet.
Mhm. Right. And so, as an investor, I mean, obviously, you like try to find discounted or asymmetrical opportunities, and you like Bitcoin because it's a winner, but that's clearly a category of its own.
Mhm.
And then in these other categories, how do you kind of assess what the winners are going to look like?
Yeah, so you mentioned I'm the CEO and Chief Investment Officer at Off the Chain
Right.
Capital. So our fund, the Off the Chain Fund, our whole goal is to outperform Bitcoin and do it with less volatility. So if
Okay.
we're going to outperform Bitcoin and do it with less volatility, we don't own Bitcoin. So
You
because
don't
if
own
we
any
if we just
derivatives
own
of it.
Bitcoin,
Yeah.
then we're doing what Bitcoin does minus the expense, so we're underperforming
Yep.
Bitcoin.
Right.
So our goal is to outperform Bitcoin. So
Mm-hmm.
the way we do that is that we're a value manager in the blockchain space.
Mm-hmm.
So for example, we're talking about Mt. Gox. We buy Mt. Gox bankruptcy claims. So what is that? So what's inside of a claim is $700 of cash, 0.1785 Bitcoin, and 0.18 Bitcoin Cash. If you add all that up, it's about $7,000 worth of
Mm-hmm.
assets. We just bought some a few weeks ago for around $4,000.
Mm-hmm.
So we're buying $7,000 of assets of Bitcoin for $4,000. So
Mm.
that's how we outperform Bitcoin. We find these weird ways to buy Bitcoin out of bankruptcy courts, out of future what's called hash rate contracts. We're buying the miners' future Bitcoin, and we're getting a discount on it today for
Is that like factoring almost, where they're taking cash today for future mining rewards?
exactly, yeah. They're basically futures contracts.
That's
So
interesting.
we're getting so we found these weird ways
Mm-hmm.
to buy blockchain assets at a discount. And that's why I say we're a value manager. We're trying to buy $1 worth of blockchain assets for 50 cents.
Right.
And that's what's enabled us to be the number one performing blockchain fund over the past 5 years.
That's incredible. Yeah, when I saw, I have to disclose that I am an investor in the fund, and thank you very much for that, Brian. But $1 million invested in 16 was worth over 100 million in 21. Is that, did I get that right?
That's what it was until crypto went down over the last couple of months.
Yeah,
So,
now it's not the same anymore.
yeah,
Okay,
yeah,
got it.
but
Fascinating though. I want to,
yeah, it's done well. Yeah.
yeah, that's awesome. I don't want to dwell on this, but I do want to double click back onto the Mount Gox claims. How do you, so you buy a claim for 4,000, it's worth 7,000. How do you claim the claim? I mean,
Yeah,
at
so
what point does it become actual, value to you?
the bankruptcy was back in 2014. Our team originated these trades back in 2017.
Hmm.
Um, and so we've been accumulating these Mt. Gox claims. But in November of 2021, so I guess that was what, 3 or 4 months ago, the bankruptcy trustee certified the bankruptcy. So
Hmm.
we're expecting these assets to be distributed out over the next, 6 months or so. And so there I'm
These are the 150,000 Bitcoin that have been recovered, or does it include?
141,000 Bitcoin.
Yeah, it doesn't
They're going to
include the.
distribute out 90% of the assets this year.
Okay, it
And
doesn't
so
include the Bitcoin
that's what
owned.
we're waiting for.
It doesn't include those held by the FSB,
No,
the Russians.
no, doesn't include that.
That's a different claim.
But unless,
Yeah, I would take the
eventually we
SEAL
do,
team to recover those.
it includes the rights to those.
Hmm.
So that's our Bitcoin.
I see.
So we have rights to that. Recovering it's a
Got
different
it.
story.
Yeah, fascinating. And then back to proof of work, because you made a comment earlier about ESG. I think probably went over a lot of people's ears, but again, back to the disinformation campaign of trying to suppress the value of Bitcoin or confuse people. Everyone's heard about the disaster, environmental disaster that Bitcoin mining is. And yet, my research shows that Bitcoin miners are actually kind of leading the charge with renewable energy and to really solve this issue. And that compared to, it's a minuscule impact compared to the impact of printing
Right.
trillions of fiat dollars and distributing paper money and all that, and the whole Federal Reserve and the banking system.
Mhm.
What's your take, and what am I missing on that?
Okay. Well, let's just look at the numbers. So if you look at how much electricity is generated in the world, Bitcoin consumes 0.1% of
Okay.
the world's electricity.
Okay.
So what is that? That's about what we use for Christmas lights in the United States.
That's
Okay,
awesome.
or it's what we use for dryers
Mm-hmm.
in the United States, electric dryers. So that's how much electricity Bitcoin consumes.
Okay.
So even if you turn it off, you gain 0.1%. But that 0.1% of electricity, 56% of it comes from renewable energy sources,
Hmm.
comes from green energy. It's the greenest industry in the world. There's no other industry in the world that gets 56% of its electricity from renewables.
Hmm.
And so what Bitcoin does, it actually helps the environment because, do you know what flare gas is? When you go and drill
Yeah.
a
When
oil
the
well, right?
methane flares off.
Yeah,
Yeah.
the gas that comes out of that, they normally just burn it off.
Right.
Just light it on fire. And if you ever go by a well, you'll see a fire next to it.
Mhm. Right.
That's the methane or the flare gas that's coming off that. And so they just burn it usually. So there are companies out there that go and capture that gas and they mine Bitcoin with it now.
Hmm.
So
Mhm.
instead of that gas going into being burnt and sent into the atmosphere, they use it to mine Bitcoin. So they're taking a waste product and turn it into money.
Hmm.
And there's all sorts of other examples like that. Volcanoes in
Mhm.
El Salvador.
Yeah.
They're taking a volcano and harvesting the geothermal off that and turning that into money. And so it incentivizes green energy. There's economic incentives to go cap a volcano or go to a hydroelectric dam that's not using all the electricity because there's not enough population around there to use
Right.
it.
Right.
It's stranded or wasted electricity
Right.
because you can't transmit electricity more than 500 miles
Right.
because you start losing the electricity. It bleeds out of the lines.
Right.
And so if the local area isn't using that electricity, it's wasted. It's just, unused electricity. It's a waste product. And so you can put Bitcoin mining machines in there to soak up that excess electricity
Mm-hmm.
that's a waste product and turn it into money.
Mm.
And so that's what's happening. That's why there's this economic incentive out there to take, electricity, geothermal, waste products and turn them into Bitcoin and turn them into money.
So when Nancy Pelosi or someone in Congress just screams about how filthy Bitcoin is and it's ruining the environment, what's that about? I mean, what's their objective?
But I don't know what it's someone who's misinformed.
Just misinformed.
That's what it's about. So, or they're informed and they're big donors or banks or credit card companies
Check.
that don't want this to succeed.
That makes sense. So they get their talking points. Okay, we're kind of winding down here. We've been going for a while. This is fascinating. I have such a keen interest in this whole economy. It's not just a technology; it's an economy that's growing up. But I do want to kind of ping on one last thing. Um, there's people again are worried about price and wondering how's it going to get to $1 million or $10 million, and I don't think there's an acknowledgement about how much money is sitting on the sidelines just waiting to flow into Bitcoin in particular. Um,
Mm-hmm.
and I think that you probably have some information on this around the FASB and how they account for digital currency, right, for
Mm-hmm.
corporate balance sheets, and that they're going to change that rule, or at least they've indicated they're going to change their rule. And I'm curious what your thoughts are on that, and how many corporations are kind of like the micro strategies of the future, where they're just waiting for clarity, not just regulatory, but also FASB, Financial Accounting Standard Board clarity. And then when that clarity comes, how much money do you think is going to flow into Bitcoin from corporate, reserves? I would say probably even government reserves, and also like pension funds and whatnot.
Yeah. So FASB, they put out the accounting rules
Right.
around, what's called generally accepted accounting principles or GAAP accounting.
Right.
And so when Bitcoin was back in 2014, FASB didn't know what to put Bitcoin in, what
What category?
bucket to put it in. So they classified it as an intangible asset. And so what does that mean? So if you're a company, like a public corporation, and you own an intangible asset, if the value of that intangible asset goes down, you have to mark it down and then it hurts your earnings.
Mm-hmm.
But if the intangible asset goes up in value, you can never mark it up. You can only mark it down. You can never mark it up.
Mm-hmm.
And so, for example, Tesla bought $1 billion worth of Bitcoin. It went down 50%. They had to mark it down from a billion down to 500 million. They had to knock their earnings because of that. They had to take 500 million off their earnings because Bitcoin went down. And then a year later, it went back up to worth $1 billion again. They couldn't mark it up.
Interesting.
They had to keep it marked at 500 million. And so there's a negative incentive to add Bitcoin to your balance sheet if you're a public corporation.
Mm-hmm.
So FASB is going to change this rule.
Mm-hmm.
They had their comment period a few months ago. It's closed now. The big four accounting firms are working with them. And so they're going to change the generally accepted accounting principles on how to classify Bitcoin. And it will likely be something that's mark to
Right.
market. So, and what that means is that you can mark it up if it goes up, and you can mark it down when it goes down. And so when that happens, that will allow other public corporations to invest in Bitcoin.
Mm-hmm.
So, for example, Tim Cook, who runs Apple, he's the CEO of Apple. He was on CNBC a couple months ago, and Andrew Ross Sorkin asked him, "Do you own Bitcoin personally?" And Tim goes, "Yes, I own Bitcoin as part of a prudent investment. You should have some Bitcoin in your portfolio." Well, if the CEO of Apple owns Bitcoin, you could probably bet that Apple, the company, will own Bitcoin
Mm-hmm.
once it doesn't hurt their earnings if it goes down.
Mm-hmm.
And so if you start adding up these companies, um, you can come up with about $1 trillion
Mm-hmm.
of balance sheet money that will flow into Bitcoin.
Mm-hmm.
And if that happens, there's a what's called a multiplier
Mm-hmm.
effect. For every dollar that comes in, Bitcoin goes up between $20 and $80 worth of market value.
Mm.
So if $1 trillion comes in, at a minimum, Bitcoin should go up $20 trillion of market value, and that puts Bitcoin at $1 million of
Mm.
Bitcoin. So when that rule changes, and so we know the rules might change, we just don't know when.
Right.
And so, so my guess or my best estimate is that when that rule changes a year later, Bitcoin will be $1 million of Bitcoin.
That's fascinating.
And I would expect that to be changing sometime in the next 12 to 18
Right.
months, if not
Right.
sooner. So
And that's not even talking about pension funds going in
or
and
governments.
governments, right? Yeah.
Yeah.
Race us.
I mean, there's gonna be a lot of government, just wait till there's a government trying to buy $50 billion worth of Bitcoin.
Mm.
There's it's a scarce asset.
Mm-hmm.
It's the price is gonna skyrocket when you see big multi-billion-dollar orders of Bitcoin coming through like that.
And last question before we move on here, but at what point do we stop thinking in terms of Bitcoin equals $40,000 US dollars instead of,
Hmm.
and rather we think of it in terms of like Satoshis, which is the incremental unit.
Yeah, yeah. So what a Satoshi is it's the smallest unit of a Bitcoin. Bitcoin's divisible by 100 million. So you go at 8 decimal points, and that's a Satoshi.
Mm-hmm.
Um, so yeah, so I don't know. That's a very good question. Um, I think it probably should be done sooner rather than
Right.
later. Because when you talk to a lot of people, they say, I'd rather not pay $40,000 for one Bitcoin. I rather get whatever 30,000
Right.
Dogecoins
Right.
for 25 cents,
Right.
right? And that's not the right way to think about it.
Exactly.
Um, you know, you know, you know, Bitcoin is the most valuable asset, in my opinion. Bitcoin is the most valuable asset in the world, and most people just don't understand it
Right.
yet. And once people do understand the value of this asset, which is infinity, by the way, if you do the math and figure out what is Bitcoin worth, it sucks in all the value of everything. And so the value is infinity.
Interesting.
And so anything that you pay less than infinity, you're getting a value on it.
Hmm. Wow. Okay. Wrap your head around that. Holy cow. Awesome. So off the chain capital, you're taking investors. What does that look like for you?
Hmm. Yeah, so we're registered with the
Mm-hmm.
SEC as an investment advisor. We're limited to what are called qualified
Mm-hmm.
purchasers. So, that means you have to have $5 million of liquid
Mm-hmm.
assets or investable assets, and then we have $1 million
Mm-hmm.
minimum for
Mm-hmm.
clients. So we're more of like an institutional type
Mm-hmm.
platform, or high net worth
Right.
families. If you don't qualify for that, there's other ways to buy Bitcoin. You could buy, Bitcoin, like I mentioned, through PayPal,
Mm-hmm.
Venmo, Square Cash App, Fidelity,
Mm-hmm.
Charles
Mm-hmm.
Schwab. But everyone should have a little bit of their money in Bitcoin just as protection as we transform the monetary system from a fiat
Mm-hmm.
standard back to a hard money
Right.
standard.
No, I agree with you. And like I said, I'm an investor in off the chain, and I'm proud of that. And high net worth individuals, if you want to avoid the volatility of Bitcoin and get, some asymmetrical plays and some diversity, then I think it's a worthy of looking at. And how does someone reach you or your company?
Yeah, so our website is
Hmm.
offthechain.capital. I'm on Twitter, so it's Brian Estes
Okay.
32. Or you could email us directly you can email me. We have a team of 10
Got it.
employees, but my personal email is brian at offthechain.capital.
Awesome. Pretty bold to put your personal email out there.
Yeah, that's all
But
right.
awesome, Brian.
Glad to help people.
Yeah, thanks so much for your time. I really appreciate it. It's just extremely enlightening and an important subject. And we got to, people just need to understand what's happening here.
Hmm.
This isn't going away, and it's really transforming the economy, and it'll
Yeah,
change the future for the better, I believe.
yeah, I think so
Yeah. Well,
too.
yeah. Thank you very much, sir.
Yeah, thanks for
Yeah,
having
you're
me.
welcome.